It's down only about 13 points.
It's a 10-point uptick on the Bank Nifty.
Today of all days, penultimate day of the series, the market just quietened down. We've become used to seeing large moves on the index. Today, the Nifty has moved in a very narrow band.
Well, there was more green than red.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. Markets trade in a tight band even as choppiness continues to hold sway. A last-hour rally by financials helps the market close near day's high. All Nifty bank constituents except for SBI end in the green. Crude oil prices remain elevated as supply concerns continue to hold sway. Brent stays above $100 a barrel. Markets buzz with talk that OPEC's output cut could take place sooner if Iranian supplies resume once it finalizes a nuclear deal. Divis and Lupin slip on rising growth concerns while Abbott and GSK swing to brokerage calls. Chennai Petroleum perks up after it inks a JV for a 9 million ton, 31,000 crore refinery, while Affle India gets a leg up after Goldman Sachs says it expects the company to clock over 30% growth till 2025. The average remuneration of heads of Nifty 50 companies surged to a record 28.4 crores in FY22. Research by CNBC-TV18 shows JSW Group's Sajjan Jindal took home the biggest package in the CMD category. HCL Tech's Vijay Kumar was the highest paid CEO. All right, well, those are a lot of the stories that we're tracking this evening, but let's also tell you what we have lined up for you this evening. It's a packed show. In the next 30-odd minutes, you will hear market opinion from the likes of Mark Matthews of Bank Julius Baer and Company, and Hugh Keener, Managing Director and Chief Investment Officer at Swiss Asia Capital. In Corporate Voices, we have Rajesh Kumar Srivastav, Director Exploration at ONGC, and Pavan Kumar, Director Commercial, IGL. All right, let's get to the first story then. Markets traded in what was a tight band even as choppiness continued to hold sway. A last-hour rally by financials helped the markets close near the day's high, and all the Nifty bank constituents except for the likes of SBI ended in the green. Anuj Singhal is here with the details.
Well, the market through the day was flat, but then had that last hour flourish. That can happen sometimes on the penultimate day of the series. The Bank Nifty really led that move. In the last 1 hour, the Bank Nifty surged 300 points. For the day, of course, it was up 1%, and that led to the decent gains in the Nifty as well. The broader market was doing well through the day today, though. It's just the index woke up in late trade. In the financials, you had all these big names doing well: ICICI Bank, HDFC Bank, and Kotak Mahindra Bank, which did well. Among other gainers, you had NTPC, Larsen & Toubro, and Grasim doing well. On the losing end, you had few stocks, but not with too much weight in the index: BPCL, Divis Labs, and Tata Steel. Let me revisit banks because that really was your sector of the day. The tier 2 banks really were on fire. RBL Bank was up almost 20%. Bandhan Bank, IDFC First Bank also higher. And in some of the other stocks, we had ABB, which did well. Canfin Homes was higher, and Sun TV as well did quite well. So all in all, it looks like for now the markets dodged some bullet, and it's ready to move on. Of course, we need to see if the global markets are supportive or not.
Okay, all right, Anuj, thanks very much for that. Well, in market opinion, Mark Matthews of Bank Julius Baer has said that the global economy is slowing down. He added that if there was to be a recession, it's likely to be mild.
If you aggregate all of the central banks and what they've done over the last year, they've tightened more than at any time going back 50-odd years. And that leads the purchasing managers' indices. Central bank tightening or loosening leads the PMIs. So we shouldn't be surprised that they are below 50 and they are going down. The global economy is slowing down. And I don't think a month or two ago, if you'd told anybody that was going to happen, they'd be surprised. A very important number will be both the PCE inflation reading that comes out half an hour before he speaks, and then the CPI, which if it's a hot number, then I think people would price in 100. If we have a recession, the market will go back and test its previous low, possibly even new lows. That's what history tells us. If we look at the average of bear markets since World War II that were accompanied by recessions, you had an initial bounce like the one we had of about 20% or so, and then it fades. If we don't have a recession, then I think we'll keep going higher Possibly not in September, as I said, but over the next 3, 6, 12 months. My hunch is that will be the case because I think the labor market is just too strong to have a recession. If it is, it'll be extremely mild.
All right, well, let's get in some more opinion then. Hugh Keener, Managing Director and Chief Investment Officer at Swiss Asia Capital, also expects to see a slowdown in the economy, especially in the US on crude. He said that prices need to adjust higher as it is not accurately reflecting the situation on the ground.
The futures market is driving very big yo-yos, whilst actually regional issues on getting access to that material at the same price is almost impossible. In the meantime, what we have is a slowdown of the economy, particularly in the United States, whereas if you look at the Chinese economy, it's been pretty weak, but there we have already seen stimulus. I think I more or less agree with what he's saying. I have to specify that because, as you know, oil prices are swinging depending where you are in the world, depending what your infrastructure and logistics right now is. So we've got very big dislocations. So probably people who get oil at significant discount to the $80 we are today. And there are probably some people who pay significantly more due to logistic issues. So the spread is actually quite big, and therefore the futures market is not really representing actually what's happened on the ground on the end for the end consumers.
Okay, well, let's move to the second headline today. Then crude oil prices remain elevated as supply concerns continue to hold sway. Brent stays above $100 a barrel. Markets buzzed with talks that OPEC's output cuts could take place sooner if Iranian supplies resume once it finalizes a nuclear deal. Sonal Bhutra is here with the details.
That's a lot about what's happening in the oil and gas space as well, right? Overnight, we saw crude prices crossing that $100 a barrel mark because Saudi Arabia hinted that there could be some production cuts as well, and that is the reason crude oil prices, they surged 4% in overnight trading session. That is about crude oil prices. Even gas prices, look at the way they have surged. They were up 13% in the European region in the overnight session. They are at a record high level. European gas prices up anywhere between 500 to 700% this year itself. If we talk about what's happening with the spot LNG prices, even they are at a record high levels at $57 per MMBTU. That is in the Asian region. And one of the reasons why we are seeing this surge is because of the supply constraints because of Russia-Ukraine war. There was additional damage to a key pipeline into Europe, and that is the reason there is a fear that supply could be crunched further, and that's why this move on gas prices as well.
Okay, all right, Sonal, thanks very much for that. But let's stay with the entire oil and gas space. Rajesh Kumar Srivastav, Director Exploration at ONGC, believes the rise in crude prices could have an impact on the windfall tax by the government.
Even though there is an upward revision, but the general trend, what is anticipated is to stabilize somewhere at a lower price.
Okay.
So that is a reason I am saying that it could be revised further down. We also are in process of proposing some other mechanism rather than this imposition of tax directly.
Okay, well, meanwhile, IGL surged about 2.5% in trade today. The company's director for commercial, Pavan Kumar, told us earlier that the allocation for gas were reduced for the company. He also added that the company is not looking at slashing CNG prices.
Allocation has in fact decreased for IGL. Earlier we were getting around 6.5 million per day, but now it is around 6.06. So allocation has almost come down, but it has benefited IGL because earlier we were getting pooled gas at a higher cost, which was around 10.5 to dollar per MMBTU, but now the weighted average cost is around $7.50. So it has significantly helped IGL to bring down the input cost. We should encourage the customers and the general public at large for buying CNG vehicles, and we encourage them for conversions so that we have a bigger market. So we have a long-term view so that we don't lose the customers. So since we didn't increase the prices, so we are not going to reduce. As of now, we don't have any room for price cuts because we are absorbing whatever hike we absorbed, we are compensating that now.
Okay, so that's the word coming in from IGL. But the third headline today, Lupin slipped over 2.5% and Divis Labs stumbled 1% on rising growth concerns. Separately, Abbott and GSK Pharma were buzzing in trade on the back of brokerage views. Well, let's in fact focus on Lupin, which was one of the stocks which was actually one of the top losers even in the F&O space. Now, one of the key triggers for Lupin going forward is definitely the launch of a particular inhaler drug, Spiriva generic, where the target action date was slotted for August of 2022. While it's not a line in the sand that it has to be a launch in August 2022, the street was hoping to hear on the particular drug by then. Now, the company has said in Q1 FY23 that they have responded to the agency on questions. They're hoping for an approval soon. They are eyeing a launch in Q4 itself, and the launch preparations were on. Now, whether or not their Pithampur facility will eventually get inspected before that, how exactly their device manufacturer's inspection has gone, whether or not the US FDA is satisfied with the queries, all of these are questions which one needs answers to, and whether or not there's any kind of delay in terms of the approval process. The stock is down around 30% from its 52-week high, so maybe a large part of the stress is already factored in, but this would be an important launch to watch out for simply because it's a $700 million drug. Now, moving on, Divis was in focus. It was one of the top losers on the Nifty today. So that stock was in focus on account of a Kotak Institutional Equities view, where they've maintained their optimistic outlook, which is the company in the AGM, and several projects are related to 6 growth engines going on stream in the next 2 years. But the but Kotak says that recovery in generic APIs is unlikely to help bridge the gap for lower molnupiravir sales. Remember that the sales of molnupiravir have dipped simply because of COVID-19 not being as serious as before, or the cases not being as serious as before. Now, there is an estimate that Kotak is assuming only a 2% EPS CAGR over FY22 to 25. Despite recent correction, the valuations remain elevated according to them. They have a reduce with a target unchanged at 3475 for Divis. Now, Abbott was the other stock in focus. CLSA wrote on it. They have a buy with a target price which was raised to around 22,510 rupees. They say it's double-digit growth in FY22 despite no COVID product in the portfolio. Incremental competition is expected for the key brand Dufaston, which is by Abbott in India. But new key therapies will probably support medium-term earnings outlook. They've tweaked their EPS estimates on higher cost assumptions. Lastly, GSK was in focus from the entire pharma MNC space. They had a management analyst meet yesterday. 78% of the business is from prescriptions and 22% from vaccines. The prescriptions business is expected to deliver strong growth in Q2 of FY23. The company is also guided for 8 to 9% price hikes in FY23. Now, levers for expansion for GSK include new launches, cost saving, improved market rep productivity, and also they expect demand in vaccines to recover by FY23. Morgan Stanley wrote on the stock. They have an underweight with a target of 1416. They are underweight due to rich valuations and relatively lower growth profile for GSK. So a lot of pharmaceutical stocks, both from the MNC as well as from the generic manufacturing space in focus. But let's move on then. Even 8 months after the Vodafone Idea board approved converting interest on deferred spectrum payments and AGR dues into government equity, the centre is yet to complete the transaction. So what's holding the government back? Ashwin Kumar has a detailed story on this.
The government had pitched the telecom relief package introduced last year as a catalyst for turning distressed telecom sector into a sunrise space. Now, while the industry has showered praise, one key component of that relief package is yet to take effect, even as we near nearly 12 months since that cabinet nod. Now, that key component has been the scheme allowing telcos to convert interest on deferred spectrum payments and AGR dues into government equity. Now, Vodafone Idea opted for the same scheme on January 11th of this year, 2022. Now, the net present value of interest dues would add up to a little over 16,000 crores. However, nearly 8 months post Vodafone Idea's decision, government is yet to convert outstanding dues into equity. Now, this equity conversion would turn the government into the telecom company's single largest shareholder as of Jan 2022. That would translate into a holding of 35.8%, which is higher than either of the two remaining promoter groups. Now, this was anticipated to be a long-drawn process. Any such conversion would require the nod from the Finance Ministry. Vodafone Idea is listed, so it would also require the SEBI nod and finally the approval from the DOT. Now, in March, Vodafone Idea had pleaded before the government to fast-track the conversion process. The company had claimed that it's in talks with various funds for raising funds, in fact, and that equity conversion would help in mobilizing them. Now, at the time, the company was seeking to raise as much as 20,000 crores from promoter groups and external investors. Now, with little movement in April or May, government sources revealed in the month of June that the equity conversion may be completed ahead of the 5G auctions. Now, we had learned at that time that due diligence had almost been completed and that SEBI's final approval is awaited. Now, in July, Finance Ministry granted its nod, pointing at a possible conversion prior to the 5G auctions, but the auctions began as scheduled on July 26th, with still no movement. Now, while the auctions were underway, the telecom minister revealed that technical issues had come in the way and that conversion will take more time. So, are there concerns that the government has on its mind? Well, the company has admittedly struggled to raise funds for its operations from either external investors or the promoter groups. The telecom's customer base has also been bleeding, has been eroding, with lakhs porting out almost every month. And these concerns are taking a toll on the company's finances with mounting losses. Now, speaking of the subscriber base, the first half of 2022 alone has seen the company lose over 88 lakh subscribers. The 12-month period ending with the month of June 30th of this year saw Vodafone Idea lose as many as 1.66 crore customers. And for the 15-month period beginning 1st of April 2021, the company saw over 2.7 crore customers porting out. In fact, the last time the company added subscribers was way back in March of 2021. Now, expectedly, the financials are nothing to write home about. Since the merger, the cumulative losses are pegged at 1.68 lakh crore rupees. The subscriber base has fallen from 422 million to 240 million. That's down by 43%. Meanwhile, the total debt has crept up to nearly 2 lakh crores. Now, the effects of this was visible in the recently concluded 5G auctions. Vodafone Idea's total bid of about 18,800 crore rupees looked bleak against Airtel's bid of 43,000 crores and Jio's bid of 88,000 crores. Now, the nearly 8-month delay in government action is at odds with the recent pace that has been shown by the DOT in execution of spectrum auctions and the fast pace of assigning spectrum to the telecom companies. Now, while the government leaders continue to cite issues, no clarity has emerged on the nature of such issues and the possible timeline for execution.
Okay, all right, Ashwin, thanks very much for that. We need to take a short break, but before we do that, we'll leave you with some of the market opinions that we received through the day.
For the most part, I think about 80% of them found that the market in India right now is way too expensive. So if you actually look at the absolute numbers, MSCI India is at 21.3 times, which is more than double MSCI emerging markets and MSCI China. So I think this pullback, and of course, historically, India has been expensive, but 100% premium over both these indices, I think, is way too high. And hence, I'm not surprised with the pullback in the markets.
Welcome back. You're still with us on Markets Today. Let's get to the rest of the stories that we're tracking for you. The fourth headline today, Chennai Petroleum was buzzing in trade after the company inked a joint venture for a 9 million ton refinery worth 31,000 crores. The share was up over 2%. Sonal Bhutra is back with us. Busy day for her to tell us more. Sonal.
Oh yes, it is a positive news because it was a long pending capex that the company had earlier announced, and now the funding has come through for them. As you said, the board has approved a joint venture with IOC and seed equity investors. The JV will form and implement that 9 million metric tons of refinery project in the Kaveri Basin, and the total amount for this capex is 31,580 crore rupees. So there is some escalation in cost as well. The seed equity investors include the likes of Axis Bank, you have HDFC Life, SBI Life, ICICI ICICI Pru and ICICI Bank as well. And board has also approved equity investment from Chennai Petroleum in the JV to the tune of 2,570 crore rupees. The stock is not only doing well today, it has been an outperformer through the course of the year and this month as well. On 13th August, company was allowed to resume production to 100% by Tamil Nadu Pollution Control Board because earlier they were asked to cut it to 75% of their total capacity.
Okay, all right, Sonal. Thanks very much for that. Well, moving to the IPO space, then airport service aggregator platform Dreamfox Services IPO was oversubscribed on day one itself. The company has raised 253 crores from anchor investors. Well, in fact, we did speak to the management of Dreamfox to talk about the company's global plans. Let's listen in to what they had to say.
We are the market leader standing with a 95% market share. And yes, in India, with the professional connects, it was a bit easy to start this business because you already know the industry well. But it's very important right now for also to grow globally as well. And that's what, as a company, we see that, we have a lot of potential to grow global. When we started this business 9 years back, the complete business focus was only on the lounges. However, now we also have the other services added in our portfolio as well. However, we have just started this after COVID. So we expect to see numbers growing in the other services in coming years.
Okay, all right. Well, that's the management of Dreamfox. But let's move on. Affle India surged over 2% in trade today. This is after Goldman Sachs initiated a buy rating on the stock. Sonia is here to tell us why the brokerage is bullish on the stock.
Well, thanks for that. Affle India was the big mover in trade today on the back of a Goldman Sachs report where they've initiated coverage on the stock with a buy rating and a target price of $14.95. Now, Affle India is into mobile advertising and Goldman Sachs says that there is increased penetration on the internet, smartphone and e-commerce penetration, and that will benefit Affle India. They are projecting a rise of 32% compounded growth rate in the revenues over FY22 to 25. And they also see that the company Affle India has multiple moats, whether it's patents, platforms and the first mover advantage in India. Not just that, the company is now focusing on high growth categories, whether it's education, tech, food technology and e-commerce, and these high growth clients will help them achieve their revenue targets over the longer term. A big move on the stock today.
Okay, all right, Sonia, thanks very much for that. But let's move on then. The average remuneration of heads of Nifty 50 companies surged to a record 28.4 crores in FY22. Research by CNBC-TV18 shows GSW Group's Sajjan Jindal took home the biggest package in the CMD category. HCL Tech's Vijay Kumar was the highest paid CEO.
As per this interesting data, which is compiled by my colleague Yusuf, the average remuneration for the heads or the chiefs, as you mentioned, of the Nifty 50 companies surged to a record level in FY22, that is at 28.4 crore rupees. And it's not only professional-run companies that top the list. Even promoter-led companies like Divis Labs and JSW Steel, they saw aggregate compensation of 140 crore rupees. Now, the average compensation in FY22 was up. We saw a 34% growth out there. And between FY18 and FY20, the average compensation, it averaged around that 17 to 18 crore rupees. So from there, it has come into 28.4 crore rupees. Now, let's get down to the names. Who really got the most amount of money? HCL Tech's boss, C. Vijay Kumar, was the top paid professional. Also because this included a long-term incentive from a subsidiary to the tune of $12.5 million. In the highest paid MD and chairman category, it was Sajjan Jindal, and this was due to profit-linked commission of 121.7 crore rupees because of high profitability for the company. Wipro's CEO was the second highest paid head, that is in the Nifty pack, with an annual pay package of 79.8 crore rupees. For some of the IT majors, let's talk about them now. Salil Parekh of Infosys drew compensation of 71 crore rupees. CP Gurnani of Tech Mahindra drew compensation of 62.7 crore rupees, and Rajesh Gopinathan at 25.8 crore rupees. The compensation of clause includes salaries, bonuses, stock options, incentives, and other rewards paid during the year as well. The four IT firms, X of TCS, along with Divis Laboratories, JSW Steel, Hero Motocorp, and Shree Cement together account for 56% of the combined Nifty 50 remuneration of 1,419 crores in FY22. Other companies which saw doubling their CEO's compensation include L&T, Maruti Suzuki, Grasim, Apollo Hospitals, that is the company there. On the flip side, ICICI Bank, Kotak Mahindra Bank and HDFC Bank from the banking pack, they saw their CEOs taking lower remuneration than what they earned last year.
Okay, all right, Sonal. Thanks very much for that interesting data there. But on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.